Hey, what's up, YouTube? You're tuning in to howtoplaystock.com. My name's Kepley, and today I wanted to cover a video on a trade that I'm about ready to make here, and I wanted to show you the strategy that I'm using for this trade that I'm going to make. And it consists of a few different things. These are tools that I'm using on freestockcharts.com, and what I'm referring to here as far as the tools, I'm going to use Stochastics, the acceleration bands, I'm going to use Bollinger Bands, and then I'm going to use the 50-day and 200-day moving average. Okay, if you're not familiar with those, stick around because I'm going to show you on the video here how those work, and I'm going to show you how you can set them up on a chart so you can use them to your advantage. Now, this trade that I'm making, though, it's not going to be necessarily a really short-term trade. I'm looking at making a trade that's probably going to last at least a couple months, maybe a couple years. I don't know. We'll have to see how this goes. Basically, the reason why I'm making it a long-term trade is because right now central banks are printing a whole lot of money. And I've said in a couple previous videos that you can become your own central bank, and one way to do that is to bet against all the debt that the central banks are creating from printing money. So that's what this trade is focused on. Stick around. If you haven't subscribed to the channel, please do so, and I will see you guys on the inside. Alright guys, here we are. I'm looking at Google Finance right now, and I've got another tool that I use called freestockcharts.com that I've pulled up. We're looking at McEwen Mining, which is a stock that I'm looking at trading here soon. And the reason why, again, is because I'm placing a bet against central banks and their monetary policy for money printing. The more money they print, the more the value of the dollar is going to go down, and real assets like gold and silver are going to go up. Alright. If you haven't done any research on gold and silver, I'd highly recommend doing so right now. There's a guy by the name of Mike Maloney out there who's an expert on gold and silver. There's a few others as well, but they're all saying the same thing, that gold and silver are basically entering into a bull market right now. And the reason why is because, again, central banks just cannot stop printing money. The stock markets are, I would have to say, overinflated, at least by 10 points on the P/E ratio scale. The S&P 500 right now is around 20, I want to say 25 points, give or take, a point or two, but that's still way overinflated compared to fair value on P/E ratios, which is around 10 to 14. But with that in mind, things have to correct and come to a fair value eventually. And one thing you can do is get into gold and silver and start investing in those. The other thing that you could do is get into mining companies whose profits are solely based off of digging resources out of the ground like gold and silver. So when gold and silver prices go up and demand goes up, so do a lot of the mining companies and stocks. They'll go with it. And I'll show you on the charts here real quick. Before we switch over there, I'm gonna show you a couple things I look at on Google Finance. So the P/E ratio here, we'll ignore that for this video because P/E ratios really are only used or should be used for more long-term investments. So like if you were holding on to a stock for dividends for a few years, you might want to look at it. Actually, you would want to look at it. But for this video and for the strategy I'm using, I'm disregarding it because it doesn't matter. This is a short-term trade. I'm talking a couple months or a few months, maybe up to a couple years, depending on what happens. So I'm just going to disregard P/E ratios. I will look at the volume. So there's 1.88 million shares being traded, and on average about 3.57 million are switching hands. So that's pretty good volume. The other thing I'll look at is 52-week lows and highs. The low is 71 cents. The high is $4.92. Right now we're on more of the high end, which is $4.37. So that tells me I want to wait until the price drops a little bit. But with that being said, we'll go to freestockcharts.com real quick. Back over here, the yellow band, we're looking at McEwen Mining. The yellow band is your acceleration band, okay? Now, you'll notice that when the candlesticks or candle bars get outside that, you've got yourself a nice strong uptrend that's going, and you can obviously see that right here in this uptrend. You've got a 50-day moving average, which is in blue, a red moving 200 moving day average, which is in red, and then you have Bollinger Bands, which are these little guys right in here, if you follow my cursor. And then there's an area in between the acceleration band and the Bollinger Band, which I like to pay attention to as well, because that'll really tell you if you got an uptrend going or starting. So I look for that area first when I see a trend starting. Right now we're on the weekly chart, so each candlestick is representing a week, and I like to stick more with the week long charts here for this trade that I'm making, because it's more long term. I can see what's going on, from a more long term standpoint. But you'll also notice that the 50-day moving average, which is in blue here, it goes down. If you follow it, it's above the candlesticks all the way up until here, where your uptrend starts. You'll notice that. What that is, your 50-day moving average, what that means anyways, is if it's above your candlesticks like this, it's acting as resistance. And if you don't know what resistance and support levels are, I'll leave a link here in the video so you can go back and watch what that entails. But the 50-day moving average is acting as resistance, which means that it's suppressing the price movement of the shares. And you can tell by the red candlesticks, it's suppressing it, so it's keeping it down, and it's not moving up. That's basically what resistance is. It's just a ceiling. And you can tell that's obviously what it's doing here, all the way up until you get this little green candlestick that hits the top of the 50-day moving average. See that? I'm zooming in. It touches right there. That's what you're looking for when your uptrend starts, because from here, your 50-day moving average, you'll notice moving forward, it's below your candlesticks, not on top like it was back here. So now your 50-day moving average is acting as support, which means that it's propping up the price. It's keeping it from dropping past that point. And when it acts as support, you get yourself an uptrend, just like you're seeing right here. The other thing you might notice, I have a line drawn right here. That's kind of where the 50-day is headed, the 50-day moving average, that blue line. Meanwhile, the 200-day moving average is crossing over and going below the blue line. I'll draw a line right here and show you. One second. See right there, that line that I just drew? That's your red line, your 200-day moving average. It's going to shoot through there. You get this crisscross. So now your 50-day moving average, which is going to be up here, is going to be above your 200-day moving average line, which is down here. That's what you're looking for. Now, when that happens, guys, when you're looking at index charts, or say like the gold charts for gold, normally it indicates that there is a bull market taking place. You can use this with stocks too. It doesn't necessarily mean it's going to go into a bull market, but it means that the trend's going up for sure. Now, if you look at the S&P 500 chart, you'll notice back here I circled it on the 50-day, which is in blue, and the 200 moving day in red. You'll see I circled back here where they cross, and you can see that the 50-day moving average is acting as a support level, okay, for the S&P 500, and you'll notice when it crossed, look what happened. That was back in 2011. Look what happened when it crossed over. It shot up for 5 years in an uptrend. Okay, and that right there, what you're looking at, is a bull market. Now, what eventually is going to happen, and I'm waiting for this right now, is we're going to go back into a bear market. And what you'll look for is things like the Stochastics tool, which is down here. Basically what it measures is the movement in price. You can kind of use it as a indicator to determine if price is going up or down. And to give you an example, I drew a line right here at the top of the chart where you get your candlesticks. You'll notice the price starts going down, right? Up in here. And I'll draw a circle on it right in here. Price stops, it stops going up and it starts dropping a little bit right in there. Well, look what happens down here in the stochastics. Your stochastic starts dropping as well and goes below the red line. Okay, that indicates, you know, if you're watching this real closely and you see this start going down like it is up in here, then more than likely the price is going to start dropping, and you'll notice that the price is starting to drop right now on the S&P 500 index. That's on the weekly chart. Okay, I'm waiting for basically the 200 moving day average to cross back over and get above the 50-day moving average. Alright, because that will basically tell me at that point that we're back in something like you know, the 50-day moving average moving above the share price, and it'll act as resistance again, causing the share price to drop. So that's what I'm looking for. It's kind of confusing a little bit, but you'll get the hang of it. You can always go back and watch this video again if you don't understand it. But if we go back here and look at McEwen Mining on the weekly chart, you'll notice the stochastics right now is kind of hovering right here, and the price is dropping a little bit. We'll drop it down to the daily chart. Daily chart looks like it's getting ready to drop according to the stochastics, which is good for me because I drew support and resistance lines here. This is the support, that's the resistance, and you can see I drew out a bottom right there back in July. That's about $3.60 or $3.70, roughly around there. That's kind of the price I'm looking at for jumping in on this stock, because given the 50-day moving average and the 200 moving day average, given that the indicator on the weekly is showing that it's breaking out, I want to wait for the dip, just this short little dip here, because it's going to go back up. It's going to go up some more. I'm pretty sure of that. And if not, I'll just wait it out. But I'm not putting a whole lot of money in at first. I'm going to wait and see if I'm right. That way if I do lose, I'm not losing a whole lot. This is a resistance line right here, which would be a top. So you can see the green candlestick hit a top right there. And that was, what, roughly about $5. And what I find interesting with this stock is analysts are predicting that it's going to go to about $5. Okay. Now if we go back to the weekly chart, I just want to show you something real quick. I drew a top at the very top of this stock to see where it was at its highest, and it was at about $10. So it has a long ways to go as far as hitting its new top again. And if you look at the chart on the weekly, the blue and the red, they're going to cross here soon, and I'm going to get myself a nice, basically bull market type movement going on this mining stock. So the plan is to invest in this probably late September. But that's basically what I'm doing as far as my strategy on this. If you have any questions or concerns, please leave comments in the description below. Um, and again, remember, you guys got to be patient when you're making trades, okay? Um, and you also have to be patient with your long-term strategies when you're using an income dividend investing strategy. So just be patient, and remember, income is the outcome. You're tuning in to howtoplaystock.com. These are today's investors' investing tips. If you haven't subscribed to the channel, please do so. Please share and like this with other people, and I will see you guys in the next video.